As you all probably know by now, today's webinar is about the euro dollar, right? Here we're looking at euro dollar with one-day candles, as we can all see, right? Now we're going to focus on 2019 right here. This is today's analysis, let's say. Well, actually, most of you are probably aware that dollar has been dropping since all the way here, right? Back in 2018. But today we're just going to focus on this right here. Okay. Now, before I go forward, let me quickly introduce myself. I am Krikor. I'm the account manager here at Key Option. And I do want to give a quick disclaimer. All right. So please don't take what I'm going to talk about today to be financial advice. This is just to help educate you to make your own trading decisions. You do have to always do your own research as well. All right, this is supplemental to your own work. I really hope it's going to help out. And like I said, if you have any questions whatsoever, feel free to ask me. I'm going to try answer some of them throughout if I get the chance to. If not, we'll go through as many of them as possible at the end. All right. So let's get started. As I said, today we're focusing on euro dollar. Right. Now, as we can all see, 2019, this has happened, right? Clearly, euro is dropping, dollar is gaining, right? Now, if you notice the shape, it's constant ups and downs, right? It's kind of like the back of a dinosaur here. Down, up, right? These graphical tools here, we're going to get to them in a bit, so try to ignore that for now. What we want to see is if this here, this is the same as, let's say, this, right? Most of these are just pullbacks. They're pullbacks from the main trend. This could potentially be a pullback or, more interestingly, a reversal. And basically today's lesson is about whether this is a reversal or a pullback. Now, we might not come to a decisive, clear answer, but we're going to see what we have to look at going forward as well to figure it out all together. Now, let's get started. I'm going to take you to some slides that I prepared here, just pointing out some of the key factors, right? Give me one moment, and here we go, right? Euro USD fundamental analysis. So let's first talk about the gain of the dollar. So clearly from January to August, we had the dollar gain in value, right? These are the factors that have the biggest impact on that. So first of all, unemployment, 50-year low, right? If unemployment is low, more people have jobs, right? More people have jobs, more people are spending their money. Now, I don't want to skip over this point too quickly. Spending is one of the most important things in economic growth, all right? Whenever you go out and you spend your money, it is pushing the economy forward, right? The reason for this is, let's say you're going to go to a shop, you're going to buy something, your money will go from your pocket to that person's pocket. That person will then spend on something else, that other person will spend on something else, and money will just flow through the economy, right? It'll help businesses expand. It'll just have money circulating from here to there, and basically it is one of the most important factors that can help economic growth, right? Consumer spending. And in a bit, we're going to see how the different entities that try to promote economic growth try to influence this right here, right? Now, another factor has been the stock market. The stock market has reached a bit of a peak. Let's focus on the word peak, right? It's reached the highest point it has in a long time, possibly the highest point it has ever reached. And let me show you what that looks like, actually. Let's go back to the platform. 2 seconds. And I want to show you what the stock market looks like right now, just so you have a visual clue of what's going on there. Like I said, it is at a peak. So it is at a very, very high point, performing incredibly, right? Now, if you want to follow the stock market, I'm going to show you how to do that if you're already not aware. So if you open a new asset, we can find ETFs, right? To those who don't know what that is, ETFs are exchange traded funds. This means you get to trade on different umbrellas or different indices, right? An index can be something like the S&P 500, which tracks the top 500 performing companies in the United States, right? So let's say you want to really diversify and trade on 500 companies at the same time. This is how you could do it. As you can see, these top 500 performing companies have gone all the way here, right? Highest point it has in a very long time, highest point it ever has, actually. It is a peak. So you can see S&P gaining, stock market gaining, the dollar also gaining, right? They usually go hand in hand. Now, going back to the slides, let us talk about what happened after August, right? Because as I wrote here, in 2019, this right here is between January and August, right? So September comes in, and all of a sudden, economic reports are declining, right? Economic reports could just measure different things in the economy, like employment, outputs, inflation, and these are very important in understanding where an economy is right now, if it is growing, if it is contracting, just understanding the health, all right? Now, manufacturing has also taken a hit, and the business investments seem to be declining, right? So a lot of foreign investments are declining, possibly due to Donald Trump's tariff trades, right? Another thing is inflation. To those unaware, inflation is the increase in prices, right? Now, there is a healthy inflation target that every country has. For the US, it's right here, 2%. So to give you an example, let's say you go buy a phone and it costs $100, right? They want by next year that same phone to cost $102, 2% up, right? Inflation is one of the most important economic indicators. Currently, it's at 1.7, so it's kind of stuck here, and it's already November now, right? So they have about less than 2 months to get this up to this. Now that is a stall. It is not good, right? And that should raise flags straight away, all right? Let's kind of discuss why this could be happening. Now, what I'm going to do is I'm going to discuss theory to talk about why this possibly may be going on, right? To those who haven't seen this before, this is called the business cycle of the economy, right? You can use this to understand any kind of business or any kind of economy, any kind of industry. Now, before I go forward, I do want to clarify this is theory, right? And when we look at theory in economics, it is quite messy, and it's never exactly going to be an exact science. Because when we're studying economics, we are looking at the behavior of millions of different people at the same time. And, well, the theory is going to expect people to act in a certain way, to act perhaps logically, and people are not going to always act logically, right? So economic theory can be messy. Don't expect this to be precise, but it can be a good way to understand where we're at now with the US economy and where it could be going next. All right. So let's assume the US economy was here in a boom, right? Now, this line, this diagonal line, is the long-term economic growth of the US, right? Like I said, you can apply this to any kind of economy, but right now we're focusing on the US. So let's pretend this is the long-term growth right here. Just like you see on the platform, right? On different charts, currency pairs. When the price is going up, there's ups, downs, ups and downs. It's similar with the business cycle. There's a boom, right? This is where the US was for all of 2019, all of 2019 to August at least. Which is also called an expansion, so a boom or expansion. And then it reaches this point right here, right? This is the peak. A peak is where things don't necessarily go negative. So economic reports will not go negative, but they will stall, right? So once they stall, we can expect to come here afterwards, the recession, or otherwise known as contraction, right? It's going to contract, 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 reach the lowest point, which is the trough, and then repeat itself. Up, top, down, lowest point. So expansion, peak, contraction, trough, right? This keeps happening over and over and over. So with the US market, like we said, it was probably somewhere around here, reached the highest point around August. It could not expand anymore and is now leaning into a contraction or recession, right? Now, I've mentioned economic reports a few times, and I do want to show you before we go forward how you can also track all of this stuff. Right? So I don't want this just to be something that I'm going to show you. I want you to be able to do this yourself. And of course, if you're ever struggling, you can ask your account manager to help you out as well. We are always here to help. All right. So I am going to take you guys to a website called forexfactory.com. I am sure that most of you already know this website. Some of you might go to investing.com. Same thing. Honestly, it's almost the exact same information. I just go for Forex Factory just because I prefer the interface. You'll see the website here, right? You can all see an economic calendar. These are the economic reports that I mentioned that started to go negative for the US market, right? So for example, we'll see employment change right here, right? This is going to show us the change in employment in Canada, right? It says Canadian dollar here. We know that it's released 3:30 p.m. That is my local time, GMT +2. And we know that there are some statistics here. So this 14.7 thousand is what the analysts expect will be the statistic of the report, right? So this is the analyst expectation, or otherwise known as the forecast. This is the number they came up with last month, right? Clearly, this is much smaller than the previous, but this is for the Canadian dollar. We're not going to focus there too much. I just wanted to show you how the forecast works, the previous. And if we scroll up here, you'll see whenever it's a positive outcome, it's in green, and a negative is in red, right? Now, this is an extremely face value way to look at things, but it is usually the first thing that will be noticed, whether it's positive against the forecast or if it's negative against the forecast, right? The initial movements, the initial like 15-minute movement will usually be based on actual versus forecast. And then everything else will come into play. And we are going to look at that everything else right now. So why are we here? We are here because we want to see the dollar, right? That's what we want to do. Now, we said August, it stopped expanding. September, it started struggling. October, it started declining. So I want to show you what October looked like. I'm going to show you a trick here. Let's go to filter. By the way, guys, before you do all of this, remember, there is a time here. Make sure it is to your local time, okay? Because otherwise it's going to give you New York time, right? So we're going to go to filter, and we are going to remove all these currencies and only focus on the USD. You can see I removed everything else, and I kept the US dollar, right? Now, we're going to keep all kinds of reports because they're all important, but we are going to remove some of the impact. So red and orange means high and medium impact. Anything else is unnecessary, right? We want to look at the most important stuff. When it's really high impact, red color, it means the market will most likely have a big impact. Orange will probably still have an impact, perhaps not as big. The other ones might not affect it too much, right? Apply this filter. And we're going to go here where it says today, November 8th, right? And we're going to check October, right? So let's go last month, apply settings. And here we go. Every single high and medium impact report for the US dollar in one page. Now here's what I want to show you. Look, red, 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 red. One positive, and it's important to note this positive here, right? If you just see this when it's released, you'll say, oh, that's a good thing, right? We have to start looking at the bigger picture. One green in a sea of reds is not going to be good. Look at how many negative reports we have. Almost everything is in the red. Look at that. That clearly shows some level of economic contraction, right? A few greens here and there, but most of them are in the negative. And this is what I wanted to show you. Overall, things seem to be declining, right? This is October. So this is around the time that this happens. Let's go back to the platform very quickly. Remember we said September, it stalls. October, it goes negative, right? So from peak to recession. So somewhere here, look. As you can see the date, 30th of September is where this starts. So after we see a whole September of mediocre reports, not negative, just not as positive as before, the dollar starts to lose value. So this happens after a whole month of stalling reports, and as the month is getting negative reports, you can see dollar is losing as the euro is gaining against it, right? All of this right here. Now, you're also going to notice this, right? And we're going to get to that in a little bit. We're going to get to what the dollar is doing in order to prevent this getting out of hand, right? Before we get to what they're doing to deal with this, let's go to what is happening in the Eurozone during the same time, right? So we looked at what's happening in the US. Guys, can you hear me now? Hello? Can everyone see me? Oh, okay, perfect. No trouble there. I think we're all back. Okay. So as I was saying, we are going to the Eurozone now to compare what's happening in the Eurozone compared to the US, right? During this whole time. So again, we're going to look at the same period, January to September-ish, right? So let's go back to the slides and talk about where the euro has been. Now we're going to come back to this specific slide because we're going to look at where the euro has been. So let's go forward and talk about what the European Central Bank said about the Eurozone and what ended up happening, right? Now, back in January, if any of you happens to watch this back then, you'll remember. If not, I'm going to give you a brief summary of what was said. The president, or the then president of the European Central Bank, Mr. Mario Draghi, he talked about certain situations in the Eurozone that were potentially causing problems, right? So I mentioned pressures of Brexit. I'm sure you're all aware of Brexit. This was going to happen a long time ago. It's still not going through. Creates a lot of pressure for the Eurozone as well. It doesn't just affect the UK, right? We have a decline in German manufacturing. The car industry apparently is not doing good at all in Germany. And throughout the European Union, there seem to be high levels of unemployment, which is the opposite of the US, right? There we had low levels of unemployment, kind of a 1 + 1 = 2 situation. So here's the thing. Mario Draghi says all of this stuff is happening, but he does also say that it's not going to get out of hand. He said that there is no fear of a proper recession. He said it's extremely unlikely. He mentioned that the policies they had in hand were good enough to fix the situation. He said the economy will correct itself. Nothing to worry about. Nothing here, he said, was bad yet. This was all speculation that things were going to get bad, but he said it wasn't going to come to that. All right? This was back in January. Wouldn't you know it, 9 months pass, 8 months. And September, another ECB conference at the European Central Bank. President Draghi admits that they were wrong because the euro kept dropping and dropping and dropping. The Eurozone kept weakening. Growth was minimal, if that, right? So he comes up and he says, you know what? We were wrong. We made a bad decision in not taking a more expansionary approach to monetary policy. We're going to get to that word in a bit and describe it. And he said that they are going to reduce interest rates, so an interest rate cut, and they're going to print more money, which is called quantitative easing, right? So this is what they are going to do in order to improve the economy, right? Now, these are different kinds of monetary policy. And let's explain how this works. Right? I'm not going to go too in detail about this, but just so you guys have an understanding of how economic growth works and how the central banks will try to promote that. So monetary policy is basically the job of the central bank, right? In the Eurozone, there's the ECB, European Central Bank. And in the US, there's the Federal Reserve. And basically what they try to do is they try to stabilize the money supply. Okay, so monetary policy, basically money policy, right? The policy to control the level of money. Sometimes they want to reduce it, sometimes they want to increase it. So there's a contractionary approach to monetary policy, and there's an expansionary. Expansionary is when they want to promote economic growth, when they want to improve things, right? So we said quantitative easing and we said interest rates, right? Both of these are used to promote economic growth, and they directly affect key economic indicators, like we mentioned before, inflation, output, GDP, all this kind of stuff can be affected by interest rates and quantitative easing. So let me explain how that works by giving you a quick example for each. Let's say we're going to reduce interest rates, right? So let's say you want to take a loan. You go to the bank and you want to take a loan of $100,000, right? Take a loan of $100,000 and the bank says they want interest of 2%, right? So when you pay the bank back that $100,000, you're going to have to pay back $102,000, right? 2% interest. So interest rates go from 2% to, let's say, 1%. Now you have to pay back $101,000, not $102,000. So you have to pay back less money. So what ends up happening is people can afford to borrow more money. If people can afford to borrow more money, they can afford to spend more money, right? So if people spend, what happens? Economic growth, like we said before. It gets people spending, and that's what they want to do, right? Many different kinds of monetary policy, and then there's also fiscal policy that the government does. There's so many different things they do, hundreds of charts you can analyze, but at the end of the day, they want to get people spending. This is one of the most important things. So when consumer spending goes up, economic growth usually follows. So we said that's interest rates. If we go back, we also had the quantitative easing, right? Printing more money ends up doing the same thing. If there's more money supply, more money will go from one pocket to another, just like we said before. This will promote growth. Demand for goods and services will go up. So these are the this is the approach that they're currently taking, right? If you go back to our graph here, like we said, the US was somewhere here and reaching the peak. Euro was already here, right? So if they reach the low point, right, what happens here? They go back up. Low point was potentially reached when? Back in September, right? When the president said, we know things are bad. I'm going to do whatever it takes to recover, to expand. That is when they started to print more money and they reduced interest rates, right? So what's the US doing, right? How are they responding? Remember we saw those couple of pullbacks? Here's what's happening there. You see, if you weren't already aware, the US has also been reducing interest rates since July. Now, reducing interest rates hadn't happened in the US for years. It was unheard of. And all of a sudden, July 31, they cut the interest rates from 2.5% to 2.25%. So this right here is what's happening since July, right? Here. Now, reducing interest rates, like I said, had not happened in the US for a long time. They hadn't taken this kind of expansionary state. All of a sudden, July 31, they do though, which is weird, right? Let me show you why that's weird. I personally never expected that, and a lot of people were confused as to why this is happening. So if you go to July 31, I'm going to take you back to the platform now. Right? July 31 is somewhere. Right, that was fast. July 31, right? What's happening July 31? Dollar is gaining. Why take such an expansionary state in July? Nothing seemed bad at the time. to us, maybe. So what this suggests is the most intelligent economists out there knew something was coming, right? So this suggests they knew this was coming, and they started preparing. They started preparing back from July. So going back to the slides now, yeah. So it happened in July, happened again in September, and happened again very recently, October 30th. It went from 2% down to somewhere between 1.75 to 1.5. So from 2.5 to 1.5 so fast in what, 3 months, 4 months? It's quite a movement, right? Now, what remains to be discussed is what to look for next, right? We looked at why the euro dropped, why the US gained. We know that both sides are basically pulling at the same rope, right? On one side, euro is trying to expand, on the other side, US is trying to expand. It's not like they're in competition with that. It's not like one expanding is going to, worsen the other economy necessarily, but because we're looking at a currency pair, we're trading euro versus US dollar, right? So for us trading, it is important to compare what's one doing against the other, right? So here's what we need to look out for. Economic reports, right? Number one, economic reports. These are the statistics. Statistics are important. Numbers are important. They're boring, but they are important. We went to Forex Factory together just a few minutes ago. You need to follow that religiously and not single reports. Remember, I showed you unemployment was in green, everything else was in red. You need to look at the bigger picture. I'm sure a lot of you followed NFP last Friday, right? I'm sure I definitely did. What happened? It was positive compared to the forecast. Yay, right? But no, everything else was negative, and everything else has been negative. So we need to start looking at the bigger picture. Now, the US did gain for about 15 minutes when the NFP came in positive compared to the forecast, which was a very low forecast, by the way. So another thing to look at, why was the forecast so low? But anyway, point here is that one small positive number isn't the final answer. We need to look at the big picture. We need to look at all the numbers. So going forward, it is crucial to look at all economic reports, keep all of them in mind, and have kind of a bird's eye view of what's going on. Look at everything, right? And that is the statistics, right? Now, statements and speeches by presidents of central banks is also important because numbers, and then we have opinions of the most intelligent economists in the world, right? They know best what's going on right now, right? Presidents of central banks, and basically whoever works in a central bank, really knows what's going on. So when they give a statement about the economy, when they give speeches about what they're going to do next, future monetary policy, right? Future interest rate decisions. We need to note that because not only will we know what's happening right now, we will get a leading, so a predictive indication of where the market will go next. So numbers are always historic, right? There are certain reports that have a leading quality, sure. For example, if you look at people being paid more, you know they're going to end up spending more. But again, it's all based on previous data. This right here, the speech, their statements, will give us an insight into what will happen next. So opinions of the most intelligent economists and the statistics, right? Most important things we need to look at. Third is technical levels. Now, I do want to clarify, technical levels will never be as crucial as these two right here. This is what leads the economy. This is what moves the market. This can help you know certain retracements, pullbacks, psychological levels, but it's not going to move the market. Right? It's not the driving force behind market movement. Economics move the market, but they can still be useful, right? So don't have this as primary, have it as supplemental, right? And if we go back to the platform, as you remember in the beginning, we had some trend lines on euro dollar. So let's go back there to have a quick look together. Here we go. you'll see I have some trend lines right here. So if we just zoom into hourly candles. Right. Here we just drew some very simple trend lines, because this is basically where the movement of the euro dollar is expected to happen. If it drops down here, it could potentially be the lowest point it'll reach, and it could reverse back up, right? Or it could break through and go down. Now, this, I don't want you to use it too much for the purpose of seeing breakthroughs up here and down here, because that is what the economics will determine, right? Usually what tends to happen with this kind of situation, because Euro USD right now, there is so much happening, right? Both sides are really pushing, and both sides have a lot of market news basically all the time. So movement is expected to be somewhere in here until the next statement, until the next report, or until the next economic activity happens, right? So that's why I'm saying economics come first, but this can also be useful to help you understand where the market will react, right? Along this line. You see it come somewhere up to 1.1. We could expect it'll drop back down, given that movement was not on economic activity and it was just, again, psychological levels of the market. All right. Now, that's all from my side. I hope you all enjoyed listening to my webinar. I'm going to quickly check for some questions. Let's see if we have anything. Nice chart. Thank you. Thank you, Gustas. Is the webinar recorded? First question. Yes, it is. Yes, it is recorded. To any of you who are using, to any of you who are viewing this and want to see it again, or perhaps if you came in too late, we will send out recorded versions. So please make sure to ask your account manager to provide you with one, all right? Probably should be recorded some point by the end of the day. So just ask your account manager, and as soon as it's ready, you should receive it. All right. So let's go down, see any more questions. I have some yeses, so I hope that means you enjoyed it. Very informative. Now I know how to get the big picture from Forex Factory. Yes, yes. So that is one of the most important lessons here, right? The bigger picture. Whether you're using forexfactory.com or investing.com, right? Some of you, I think, use investing. More people use investing.com, but anyway, same thing, honestly, same information. Bigger picture. Choose, look at as much of it as possible. Filter out the lower impact ones. Keep the higher impact and look at monthly reports. You can even have up to, I think, 2 months at one time to look at, all right? Does this method apply to all Forex pairs? Yes, of course. This is just one example of Euro and USD. You can do the same thing for any kind of currency pairs. You can look at, for example, if you're going to look at GBP USD, for example, right? You're going to still look at everything that's happening in the US, but you're also going to look at the pounds. You're going to analyze everything with Brexit, right? You're just going to look at different fundamentals, but they're also fundamentals, right? It's still all economics. So whatever currency pairs you're looking at, this kind of method applies, and it is more often than not the most effective way to follow market movement, looking at economics. Awesome, webinar, thank you very much. Missed the timing. Well, okay, so if you missed anything, Henry, we are sending out the recorded version, like I said, so don't worry about it. Henry, I'll send it to you myself later, not a worry. And yeah, I don't have any other questions for now, so I'm gonna thank you all dearly for watching. I do hope you all enjoyed it. If you think of any questions later on, again, please feel free to ask your account manager. They should be able to help you out. And yeah, I think for now, I wish you all a fantastic weekend. I'll see you next time. Thank you very much. Take care all.